Hey guys, David Robinson here. Welcome to the apartment investing journey. I'm excited about our episode today. I've got a couple. This is actually our first couple interview, which will be interesting for me. And they have a great story with a tremendous amount of experience and a lot to offer to you all today. So without further ado, Mel and Dave, how are you guys today?
Hey, we're great. How are you?
Good. Thanks for joining me today. A little bit about Mel and Dave, also known as Investor Mel and Dave. They have a great following online, and so you'll find them there, Investor Mel and Dave. They're innovative real estate investors who have solely acquired over 100 apartments, 24 properties in just a few short years. Using creative and successful strategies, they've been able to increase their portfolio significantly without using any of their own money. And I definitely want to dive into that today. They have 100% ownership of these properties, which means they keep 100% of the equity, appreciation, and cash flow. They've written a book, real estate investing book that achieved Amazon's #1 bestseller status very early in their launch. They have over 17 years of combined experience in real estate investing, property ownership, and management. They are a self-made couple that understand the ins and outs of business building and acquiring wealth through real estate. So Mel and Dave, again, thank you for taking the time to come on and share with our audience. And the premise of our podcast is to talk about the journey and to explore how you've gotten to where you're at today. And so if you don't mind, maybe just back up and tell us your story. You were born and then what?
Yeah, we were born, and I had 2 rental properties when I met Dave. Dave had the one, and we decided that we wanted to do real estate together to kind of keep growing. I knew that for me, I was kind of more basic. I just kind of liked having that extra cash flow coming in every month, some extra cash flow or extra money to do what I wanted with it. And I think Dave had a much deeper, bigger vision than I did. He knew, and I'll let you speak, but.
Yeah, and it was back in high school. I had a friend, we played hockey on the same hockey team, and he actually lent me a book. His dad was a landlord. He was a teacher and a landlord, and he had a couple of properties. And he lent me this book. And then in the book, I wasn't a big school guy, right? So I can't believe I actually read this book, to be honest with you. But in the book, it just talked about how people who invest, millionaires who make their money in real estate, just the tax advantages and all that. And then the one line that caught my attention, I really wish I could remember the name of that book, but it was that you can make a lot of money, but you don't always get to keep it. And in real estate, if you're set up properly, you can actually keep all the money you make or most of it. So I knew I wanted to be a millionaire back in high school, didn't know how I was going to do it. But then as soon as I read that sentence, I knew, okay, it's going to be somehow through real estate. So it was always in the back of my mind that it was going to be real estate somehow, someday.
That's great. So maybe back up to that point in time when, let me ask you separately, how did you go about acquiring your very first property? If you want to touch on that real quick, both separately.
Yeah, so for myself, I just started, it was a mistake that I bought. I bought a little house, and it was more or less, house hacking it. Redid the basement and ended up renting the basement. But back then I didn't do my due diligence. I didn't know what I didn't know. And years, kind of fast forward years, it ended up being not a legal, correctly zoned duplex. So I had to shut it down. So I ended up selling that one. So that's the only one I don't own anymore. So that was my first experience. Was a big mistake, but I didn't let that stop me.
That's great. And what about you, Dave?
Mine was, I just got out of a relationship. I had my dream job, and I knew I was going to make more money in the future. So I just bought a little house because everyone told me, don't pay rent. And so I bought a little house that I could barely afford. And I met Mel, and then we ended up renting it out. It was a single family dwelling. So I didn't go in it with rental income in mind, but now it's one of our easiest to maintain, high rent, low maintenance buildings. So I'm still happy we bought it.
That's great. Okay, cool. So that's how you guys got started, and then you connected. And tell us about how you built this empire from there. What were the steps that you took?
Yeah, we started off slowly, a couple at a time, slowly building. We were lucky at first. It was the 5% down back in those good old days where you only needed 5% down. And then it was 20% down. So we bought a couple more, refinanced what we had, used the equity from that. And then we got stuck. We didn't have any more money. So we tried being very creative. I started teaching part-time at our local college. Dave took on every single shift he could of overtime. And, we did that for a while. Then we realized, well, this isn't really getting us any ahead. Like, it's going to take us years to really grow our portfolio at this pace. So then that's when we really decided to use the power, once we discovered, and we finally decided to use it, of other people's money or creative strategies.
Cool.
Yeah.
So, sorry, go ahead, Dave.
Well, I'm just going to say, like, when Mel and I talk about this, every time there's just a sentence that I love, is once we, like, literally, we were trying to work as much as possible, as many hours awake, trading our time for money. And when we realized that, hey, we're working all the time, we're still spinning our wheels. What's, definition of insanity, right? Keep doing the same thing, expecting different results. So as soon as we realized to stop trading our time when we're awake for money and to start making money while we sleep, right? It just kind of night and day.
That was what clicked for you.
It was just, and again, it was all from a book, and just kind of, it snowballed after that.
That's great. So let's talk about that snowball process. So you started back, what year, you mentioned, the 5% years, what year did you guys connect and start investing together? Or roughly when you bought your first property after you guys had come togetger?
Somewhere between 2011, 2012, 2013. And
okay.
I think you were able to buy.
I was trying to guess. I'm like, I don't know. I hope he answers that question. I can't remember.
And I never got a 5% deal. I got my house because it was my principal residence, but I missed that boat completely. Like, that was before me, the rental property. So I wish. So I say it was about 2011 when I think you started before me.
And Mel, you mentioned that you started teaching again. It sounded like, Dave, you were working full time. Is that correct? Were you both working through this, and this was just sort of a side hustle for you at that point in time?
Exactly. This was our side hustle. So we certainly, had to make a choice of making time. We didn't have any more time than anybody else, but I think that was an important piece of the puzzle was, okay, how do we create more time to do this while still working full time, while still having, work-life, family balance, and everything else.
And so you mentioned this point, if we push forward a little bit, where you got stuck. Talk to me about how you got stuck, why you got stuck, and then let's talk about how you broke through.
Yeah. And the more I talk to investors, everyone seems to hit that somewhere between, let's say, 5 to 7 wall. Everything's rolling along perfectly. They get to property somewhere around 5 or 7, and then all of a sudden the typical financial institutions make them pump the brakes, right? So, and then give or take some numbers there, maybe some people are at 3. So but the typical lenders, the big banks, put the brakes on us. Our ratios, even though we were cash flowing, even though we had equity, everything was good. They said, nope, you're outside of how many rentals we allow, or you're outside of the typical ratio.
And real quick, sorry to cut you off there, Dave. The properties that you had invested in up to this point, were they single family, multifamily? What did you guys focus on?
All multifamily. We've only ever owned 2 single family dwellings, and we sold one of them. So we still have the one that I initially purchased. That's the only one. Everything else is at least 2 doors or more.
Great. Okay. All right. So you hit this roadblock. The banks say, hey, sorry, you've hit your capacity here. Most investors say, all right, well, I guess I'll just settle down and let the properties do what they'll do. You guys decided to push forward. How did you break through?
I mean, for us at first, it was okay, well, I guess you can't keep growing. You hear a no, and we stayed there for a little bit, and then we went on vacation. And so we're in Florida, and by the pool, and we're listening to Rich Dad Poor Dad. And, then again, that moment where it clicked and it finally made sense, and kept hearing it, leveraging and owner financing or VTBs. But I think, hearing it from Robert Kiyosaki somehow just made it different. And it was like, okay, we need to do this. So while we're still in Florida, we're literally, calling our agent and going at it and making changes. And that's when we exploded that year. That was 2017. We bought 12 multifamily residences in less than 12 months. That was 56 units. And of course, using none of our own money.
Yeah, it was all, David, all 100% creative financing. And again, like I was telling you earlier, that sentence that kind of blew my mind is Robert Kiyosaki's first rule: the rich don't work for money, right? So we stopped. I got off the overtime list. I said, I'm never working overtime ever again. I stopped working for money, and now the rentals pay for everything, and we continue to make money when we sleep. It's just beautiful, right?
Hey, so let's break this down. 12 properties, 56 units in about a year's time. What were the steps that you took? How did you do this?
Well, it was massive goals. So we set massive goals for ourselves. And then of course we took massive action, and we did. We decided we didn't watch any TV at night. We got up, we have 3 kids at home too.
Full-time jobs,
3 kids. So we had no time to waste. So we got up very early in the mornings, before the kids would get up. So that way, by the time they're up, we can do our morning routines with them. And then at nighttime we would, as soon as the kids were in bed, we were in bed too. So that way the next morning we could do it all over again. So no TV, we kind of cut that out. And, instead of TV, we replaced it with any kind of YouTube or audiobooks or that kind of thing, just to really continue to learn. And we looked at a lot of deals, and we got educated about it. And then we were able to believe that we could. I think the mindset piece was very important, to have that confidence that, there is money everywhere, and everybody was telling us we couldn't, like everybody in our city, well, nobody does owner financing, or, that kind of thing. Well, no, it's not that nobody does it. It's that maybe you don't know anybody that does it. Of course people do it. But yeah, so essentially that's kind of.
Yeah. And there was someone else, and it was kind of not righting wrongs, but there had been other investors in the past that had done it, and they had gone belly up with it, right? So we're also having to kind of trailblaze through that not trailblaze, but kind of go through that roadblock of, well, so-and-so did it, and look where he ended up. Okay. Well, so we spent a lot of time before, because other people's money, it's a double-edged sword. It can be the most amazing thing in the world, or it can be a disaster if you don't know what you're doing. So we really took a lot of time to engineer, and that's our whole saying now, is you exit before you enter. So we have an exit strategy on every single purchase before we touch anybody else's money. So that was important to us, obviously, because we never want to end up belly up, right? Who does? Mm-hmm. And that was just a selling point with the owners, right? For owner financing. Like, we were telling them how we're going to pay them back before they even had to ask the question.
Yeah, we spent a lot of time on that. And just to clarify for those who may not, listening, who may not know what we're referring to, the exit strategy is essentially, I'm borrowing somebody's money. How am I going to pay them back? So that's what we refer to as exit strategy. How am I going to exit the deal at the end of the term in 2-3 years if I have to pay back Mr. Lender? And we spent so much time on this. We've met with people across from Canada who lost their portfolio. We interviewed them. They essentially told us it all came down, the reason they lost their portfolio, it always came down to their exit strategy. For one reason, that there's certain steps. So we, of course, made sure to have our systems and our strategies.
Option A, option B.
Exactly,
C, D,
and have all our exit strategies. And before proceeding, we certainly made sure, we looked at tons of deals to make sure we didn't just buy the first 12 that we could get owner finance or 100% deals. We looked at a lot of deals to get these ones.
Okay, so help us guide us through the typical structure that you executed on with these first 12 properties, and I'm assuming that there's some variance between them all. But generally speaking, how did you structure those deals?
Yeah, and so the owner had some sort of financing in every single deal, right? So the owner was either the first mortgage or was the second mortgage. So the first mortgage, right? They have to be mortgage free to be able to hold the first mortgage. So I think one seller had about 4 buildings in that whole scenario in the 12. So he actually held 200% financed. So two buildings at 100% financing, and then he held the other 2 with second mortgages. So we went to a financial institution, got a first mortgage, and then the owner held back, I know vendor take back, seller financing, or whatever you want to call it. Everyone has a different way of calling it. And a majority of the rest were, again, getting a first mortgage from an institution of some sort, whether it be credit union, private lenders, different things like that. And then the owner holding a second mortgage as our down payment.
Okay. And so help us understand why an owner would be willing to do that.
It certainly benefits them. They don't just do it because, they like Mel and Dave. Of course, yes, they have to like the person they're going to be doing business with. So I think that's part of it. There has to be some kind of, genuine mutual agreement that both parties feel comfortable doing business together. But essentially, there's lots of benefits for them. They're going to be making money on their money, right? We're paying them an interest rate on their money, so they're getting money there. And I mean, the big piece of it as well is that they are also going to be able to defer their capital gains over up to 5 years. So that's huge for them. That's a huge advantage. And while being able to get into details on how that works with them and really explaining it and being able to explain it to the level that they feel like, wait a second, you guys really know what we're doing. And something that we've always ensured to do is always not just talk about our exit strategy, but show them our exit strategy. So we use our cash flow matrix. We show them. So on one side, it literally shows them what the numbers are today. On the other side, it literally shows them their exit strategy. So they can walk away, they can show their accountant and they go, okay, it's not just, yes, Mel and Dave were saying we're going to pay you back, but it's much more than that. It's numbers. It's black and white and makes sense to them.
Yeah. And to touch on, so the numbers part is huge, and they would always go talk to the lawyer and accountant and verify that, hey, this isn't some sort of snake oil or anything like that, right? We're making stuff up. Now, one of the other attractive things for sellers was just two that we bought last year, or late 2019. It was two buildings where the ratios did not make sense. I knew if, underwriting the deal like the institutions would, I was being nice to the owner, but I said, the deals won't work. If you're asking this amount of money for these properties, you're not meeting the ratios. Like there's no point in sending it to the bank. And it's not Mel and Dave, it's any institution. You're not going
to prove the building itself.
So in that scenario, I said, if you hold them, because he was mortgage free, I said, if you hold the first mortgage on both buildings, and then we had creative financing, and in Canada here, we call it RRSP. It's the same thing as 401k or Roth IRA for you.
Okay.
So we had someone hold the second mortgage with their RRSPs here in Canada. So we were able to purchase it 100% no bank financing, because again, the building didn't make sense, but we saw the exit strategy. We saw, hey, if we do X, Y, Z, this building is going to be worth this. We're going to pay everyone out and have the asset with zero money down, pay everyone back, and continue to cash flow with infinite return on investment. So that is where it's really, really powerful for the owners, because it was on the market for 11 months. No one was touching it. Or maybe they had gotten offers, but no one could get approved because the buildings did not make sense. So
this was a real, in our opinion, it's a true win-win, right? So we provided a solution to the seller. He was now able to sell the building. He provided a solution to us where we wanted to go in without any of our own money. And it was a true win-win, right? So we bought the property and...
I call it sometimes, it's almost like succession planning. Like, hey, I'll help you liquidate your asset, but you need to help me with financing. And people think that owners are not attracted to that. If you can get an off-market deal with an owner who wants to liquidate and doesn't want to go through the fuss, this will be a lot harder when it's a hot market and an offer goes up and a building goes up and there's 40 offers in the first day. Like, you're not going to get owner financing, right? But when you find these deals that make sense, you're literally providing them with an exit strategy, success planning, and you're helping them with their taxes as well. Because like Mel said, they get to spread, I always call it spreading the love, right? Because they have up to 5 years to do that. So
I should have mentioned this at the beginning of the show, that you guys are located in Canada. And so is your entire portfolio in Canada, or have you done any investing down in the States?
All Canada so far.
Okay.
I'm looking, to be honest with you, I'm looking in Florida. I've got a sweet or soft spot for Florida. I don't know why, but
because we go there every year.
Orlando, Clearwater.
I don't know many people that don't have a soft spot for Florida.
How can you not?
So help me to understand a little bit during this process, 2017 up to today, acquiring 100 different units, 24 different buildings. What has the market looked like in Canada during this time? Just to give some, you mentioned that if it was in a hot market, if you were in the United States, probably that's the hot market over the last 5 years, changing as we speak with everything that's going on with the virus. But maybe just give us some context around what the state of the market looked like in Canada over the last 5 to 7 years.
Yeah, absolutely. And it's been increasing. And sorry, when I say hot market, because same here in Canada, there's hot spots, right? So I literally mean like, and we have mentees from across North America. We have people in San Francisco, Miami, Atlanta, Washington, or DC. I never know what to call it, Washington, DC. And then, is it Utah? No, you're in, don't we have someone in Utah?
Yeah.
Or North Carolina or something? Yeah. So we have a couple people in the States as well, and a lot throughout Canada, like Vancouver, Toronto, Montreal, Ottawa. They're all hotspots, right? So we show people how to purchase buildings in those hot markets, I'll say, and then also in secondary markets. So that's really what we mean by is those hot markets where deals are nonstop. There are still off-market deals, and again, it's just a different play. They're banking on, I buy a building, it's here next year, it's going to be here, and I've done absolutely nothing to it just because the market is so hot. Whereas secondary, you have to force that appreciation.
And
Hopefully
I
that
think
makes
it's kind
sense.
of add to it as well. I think it's important to remember in hot markets, yes, maybe something that's on, MLS or on realtor.com may go very quickly. But that being said, there's tons of pocket deals. There's tons of people that own property that are just about ready to sell, but may not necessarily want to list it and pay the realtor fee. And this is where you're going to become, their SOS, their exit strategy. And I mean, we've done this as well. Yes, we purchased some through online, but many of them are not listed. We are finding these properties. We are going up to the owners and making it a win-win where they don't even want to bother going through a realtor because it makes sense to them and they see the advantages. So I think that's important to remember as well. So even if you're in from a hot market, can you still get seller financing? Absolutely.
Absolutely.
You just have to.
So let's talk about that real quick. Let's break that down because I know I can hear everybody asking in the back of their minds. Okay, tell us how you find those type of deals. So maybe just walk us through some of the strategies that you guys employ to find off-market seller finance deals.
And I mean, the answer is pretty simple. If people don't know you, they're not going to sell to you, and they're certainly not going to hold financing, right? So what are you doing to be out there? And when I say out there, I mean both in person and both online as well, right? So what are you doing with your social media accounts? Are you just posting, vacation pictures, or are people realizing?
What you had for dinner last night?
Exactly. Is it your place, or is it some? Are people aware? I mean, we were very blunt. What we were putting out, hey, we're buying properties. We have
in the dentist chair. Hey, I've got anyone to sell the property.
We told everybody we knew. We attended landlords association meetings. We told everybody there. So we were very, very active and very vocal about it. So that way the word got around. And maybe Bob didn't have a building to sell, or he didn't want to sell right away. But if he went for coffee with his friend, and all of a sudden they're calling us saying, hey, I heard that you guys, you buy private deals, that you'll do it through your lawyer, can you tell me more about it? So just that word of mouth, the more you're aggressive, getting out of your comfort zone in order to do so, because we were both very private. I mean, we didn't even have social media accounts at the beginning. So for us, it was getting out of that comfort zone and being out there. And once we did, it really certainly helped with our growth.
So, I get that. And I can hear people saying in the back of their minds, hey, all right, that's great. Yes, I understand that we need to get out there and be more proactive about putting it out to the public that we are interested in investing. But you guys accomplished a lot within a year period of time. So 12 different properties. It sounds like 4 of those properties may have been from the same owner, and I'm not sure if there's more involved there. But when you first got started, you didn't have a following. Now you have an incredible following on social media, but you didn't have a following back then. So what was it early on that helped you to get your first few under your belt?
Yeah, and it was, well, again, doing the research, but talking to people, kind of like Mel said, letting everyone know. And maybe to be a little bit more specific was, when was the last time you went to a brokerage and asked to do a presentation for the realtors there on creative financing, and why they should contact you because you'll get deals done. Thinking different things, brokers,
word of mouth. Hey, we're going to pay you. If you bring me a property, I'll give you $500 if I end up buying the property.
Tenants.
Just being creative, using our tenants. As we had one building, then using the tenant, but giving an incentive to these tenants to say, hey, if you know any other landlords from your previous places and you give me their names, and if I buy the property, I'll give you $500. And I mean, it could be 500, it could be 1,000, depending on the property as well, right?
Yeah, and once you have a bunch of landlord name and numbers, you start making some calls. Odds are you're gonna find someone that's gonna be a yes.
And I think it was quantity. I mean, at the end of the day, it was massive quantity, massive goals, massive action. So how do we do 12? Well, it wasn't just looking like as a 12 properties. It wasn't just making 12 calls. We got a lot of no's, absolutely.
A lot more no's than yeses.
A lot more no's than yes. We just didn't stop at the first or second or 10th no, because that next yes is just around the corner.
Yeah. Okay, great. Well, thank you for walking us through that. I'm interested in this experience that you had. I think you were traveling to a Kiyosaki concert and you guys had an accident. Maybe walk us through what kind of impact that had on your lives and how that got you to where you're at today.
Yeah, we were on our way. We were on our way to a real estate investing conference, about 5-7 hours from us. 5 hours or so from us, and we had a shuttle service that was provided to us. So we were in back seat of a large SUV. We're working away on our laptops, and all of a sudden a transport driver who was driving carelessly hit a vehicle who hit us, and we instantly rolled across the highway upside down. We landed upside down into upcoming traffic, and it was, I'll remember that what seemed to last, for much longer than I'm sure it actually was, but I'll remember certainly that moment forever, because I thought I was dying, of course, as I'm going through it. And as I'm going through it, of course, I'm thinking about my 3 kids and all of a sudden not having their parents there anymore. That day was a life-changing day for many things. We had 2 choices that day. We ended up being fine. Like, we crawled through the windows, went to the hospital, but we were discharged. We were fine. I didn't realize that at the time, but I did end up having a severe concussion, but I think I was still in shock. And that day we had 2 choices: was to, okay, well, let's go home, let's go back home, although the kids already had plans, and we'll be sore and feel sorry for ourselves, or you know what, let's keep doing what we love, not let a careless transport driver stop us. So we did. We went to the conference. We had nothing. Like, we didn't have a suitcase. We had to go shopping because we had nothing, because everything, our suitcases was impounded with the vehicle. But we still made it there. And I think that, that mindset, it just changed everything the way we were thinking. And then we just, of course, that energy from, the awful experience into a positive. And that's when we decided we were very silent about how we did this. And that weekend we decided, oh my gosh, we need to help other people achieve this financial freedom that we've been able to achieve. So we, weekend after we came back, we decided, we wrote a book. It was released within 6 months. It became a #1 bestseller the same week it was released. And now we mentor people across North America.
What's the title of the book?
Yeah.
That's bad.
Real estate investing secrets.
Real estate investing secrets.
A no BS guide to freedom and wealth.
Yeah.
Great. I'm actually looking at it on your site right now.
Oh,
awesome. Well, that's a pretty incredible story. And so was that was the impetus for you guys starting to share your journey with others and to coach and train and mentor others on the same path that you guys had been on?
Yeah.
Yes. Because we were very, very, like Mel said, secretive before, right? We thought,
people used to ask it's like, how'd you do it? How'd you buy it? Like, we never did podcasts. Investor Mel and Dave did not exist prior to the.
We wanted to be off the radar, not tell anyone.
Yeah, we were telling people we wanted the properties, but we didn't tell them, we didn't do the actual vocalization of how we did it.
That's great. Okay, so fast forward a little bit. What does your business look like today? What does your portfolio look like, and what does your business look like?
Yeah, so the portfolio, well, this year we've got some big deals under contract, 3 of them at the bank right now. We've gotten some big refinances done. So it's been kind of, we've been in payback mode so far for 2020, which is great, right? So we've paid back all 12 of the 12 that we purchased in 2017. And I don't mean pay back completely. I mean pay back the second mortgages. So we still have mortgages on our property, but the private lenders, the sellers, the investors haven't paid back.
Great.
So the exit strategy has come to fruition, right?
2 to 3 years early, which is fantastic. Right?
They're happy.
Yeah.
And then we have a property management company here in our city that manages our properties and also other investors' properties throughout Canada, right? And that company won Business of the Year in 2019.
Yeah, we're hands off quite a bit with that one. So we do have a director that kind of handles that full branch of our rentals. He does the overseas viewings, oversees all the, dealing with tenants, along with, we have 2 virtual assistants as well from Mexico. And then of course we have construction workers, both staff and contract out as well, who does the maintenance and renovations and that kind of stuff. So that's kind of on that side. And then Dave and I, we focus more on continuing to grow both our portfolio. So, looking at deals, buying more properties, and doing the mentoring piece, which we just love as well.
Yeah, the mentoring piece is a lot of fun. So we're loving that.
It's nice seeing people like, oh my gosh, week 3, and I just bought my first property, no money down, right? I just love it.
Exactly.
That's cool. So tell us a little bit about that, just a brief synopsis of what the program consists of and what you guys do in that.
Yeah, so basically we are very, very hands-on, and I think it's because we really do have that strong why of truly wanting to help people. We're not about, just massive quantity. We want quality people who are ready to take action. They get a lot of hands-on. They get over 120 videos of content, and of course, the valuable piece is that they get Dave and I in a private Facebook group where we answer questions every single day. And it's a lifetime access as well. So they get to, lifetime access to us. So it's not just weekend workshop or 8 weeks and then good luck, right? It's a lifetime access. So that way, when you do hit roadblocks, we're there throughout the entire journey. And we also go live with them once a week to answer Q&As and
then there's a whole deal section and wholesaling section. So
yeah.
The mentees have loved it so far. And again, I think we love it more because it's just been awesome and fun and satisfying, right?
That's great. Good for you guys. Where can people learn a little bit more about that if they have an interest in exploring it?
Yeah, they can just, they can DM me anywhere, send me a private message on social media. Investor Mel Dave is
and the website.
Yeah, and we also have a website where they can actually find out a little bit more about the 6 creative strategies we use that we kind of explained a bit today. And that's www.12in12months.com, and it's the numbers. So 12in12months.com.
Okay, 12in12months.com, and we'll have that in the show notes as well.
Absolutely free.
You don't need a credit card or anything.
It's like a 20-minute video on creative financing for free.
Yeah.
Oh, cool. Great. So let's talk about those 6 strategies real quick. Let's break those down, and then let's talk about this specific deal, this 6plex. We want to do a deal dig segment, but briefly summarize the 6 strategies.
Yeah, absolutely. So the first 3 are really with owner financing. So the first one, if like I said earlier, if the owner is mortgage free, they can give you a first mortgage, right? So that's kind of scenario number 1. The seller gives you a first mortgage. Scenario number 2 is if the seller will hold a second mortgage, and you get a first from someone else or another institution or another lender. So again, how to utilize second mortgages from owners and sellers. The third one is 100% financing, how that looks and how that works. They are few and far between, but again, they do exist, right? They're not unicorns, they do exist. So those are the first 3 with actual owner financing.
Yeah.
The next 3 are more if it's a person that has funds. So, and the next 3 are really with a lender, private lender. The first one is they can either give you a promissory note or they can do a mortgage. So let's say if someone has cash, there's 2 options. They can, promissory note, or they can do an actual mortgage on the property as their security. And then the third option is if someone has secured funds. Like we had talked about here in Canada, it's RSP. And for you guys, it's 401k and Roth IRA. So in a very, very quick explanation, those are the 6 that we utilize all the time.
That's great. That's awesome. Okay, cool. Let's move into our deal dig segment. Let's talk about this 6plex that you guys took down in North Bay. Not sure where that's at. Where is that?
It's about 3 hours north of Toronto.
Yeah.
Okay, cool.
Yeah.
Just north of Toronto. Great. So let's talk about that. How did you acquire this, or how did you source the 6plex? How did you find it?
This one was actually on the market, and this is the power of having a real estate investor focused realtor. Now, the realtor we use knows how we do things. So when he was listing a property, he asked the owner if ever she would be willing to hold the second mortgage. She said yes. We got the numbers. We liked the numbers. All 6 rents were very underperforming. This was a lady, great lady. We've paid her back late last year.
Yeah,
Early this year, I forget. But but again, her husband had passed, and she was never in the real estate game, right? Like that was not her passion. So this was actually I shouldn't say a burden, but she wanted it gone. So we decided.
And she just owned it free and clear. Her husband had passed away.
I'm not 100. I don't think she owned it free and clear.
Okay.
So that's why she was able to do the second and not the first.
Gotcha.
So all the numbers made sense. We saw a clear exit strategy. So we bought it at $575. And I'll let you, how do you want to break down the deal?
No, this is great. This is good. So it was a pre-market deal. It hadn't hit the MLS yet, but you had the relationship with the agent, correct?
Correct.
Okay, cool. And then briefly describe the property itself physically. What kind of sixplex was this?
Yeah, it's a nice.
It's a nice property. Sixplex. It literally looks like 3 and 3 on each side. It has 2 different laundry rooms.
They're like mirrored. They're mirrored.
So brick building.
It's a purpose-built sixplex. It was actually her husband that built it. Him and his brother built it. So.
Oh wow.
Yeah. Nice
Year built roughly. Age of it.
Oh geez, at least 7.
Roughly.
Yeah.
It's probably ish.
Okay. Great.
Yeah.
And how many bedrooms? How many baths?
All 4 of them have 3 bedrooms, and 2 of them are 1 bedrooms.
Okay, great. Okay, cool.
Good conditions as well overall. Minimum work. One of them needed some work. The bachelor needed to be redone. But other than that, everything was pretty much minimal work had to be done in the units.
Okay, great. So you bought it for $575, but you did a seller carryback second mortgage. Briefly explain that to us. Yeah.
So I don't have my calculator. So $575. She held back 25% loan to value, and then I had a credit union in the area here give me a first mortgage of 75%. So 100% financed. What was it? A 5-year term? I forget the interest rate. 5-year term interest rate was somewhat reasonable, and 25-year amortization.
Okay, great.
Keep the payments low, right? It was P&I. It was principal and interest, not just interest only.
Okay, great. And so what was the plan going in? Once you acquired the property, you mentioned that rents were lowered. What was the strategy going into it?
Yeah, well, the first thing we wanted to do, of course, is get, the 1 unit was vacant. So we wanted the rent coming in, but we wanted to make sure it was going to be a nice amount to help with the value of the property. So we made it look nice.
Yeah.
So it's a really nice 1-bedroom apartment, and got that one rented right away. And then as tenants changed over, then we ensured this is where being online is so powerful, right? People know who you are, want to rent from you. So we advertised we took great pictures, we advertised it, we're able to get the rents up back to market value. And quite of I think there's only one.
There's only one lady remaining at the.
Yeah, that's from the original. So.
And David, just to show you how substantially underperforming the building was, the 4 3-bedroom units were all at about 1,000, 1,100. The lady's still at 1,000, but we've done rent increases. I think she might be at 1,100 now, but now they're renting for 1,600. So 4 units up by $500 to $600, right? It really cranks up your NOI pretty quickly, right?
Yeah.
And the 2 1-bedrooms went from somewhere, I think they were 6 or 7. Now they're about $900 to $1,000. So that's what I mean. When I saw the underperforming and then I saw the ceiling we could bring it up to, it was a night and day exit strategy, right?
Yeah. So how long ago did you guys acquire that one?
That one would have been October 2017.
Okay. And where does it stand today?
We just refinanced it. It came in at 840, I think it was ish.
Great.
So we paid back Mrs. Second mortgage, right? Or $100,000 or $110,000 that was remaining. And we've got a new first debt at an A lender for lower interest. And we're laughing. We got a refi. So we're sitting pretty, or whatever that saying is.
So that's the dream deal right there, right? Identify an off market, in this case, a pre-market deal that has some value add component to it. In this case, it was just under-rented, undermanaged. She was probably tired of the property. It wasn't really her thing. Her husband had died. You guys come in and solve a problem for her. You do some renovations. You increase rents and increase the NOI significantly, yes, which thus increases the value of that property. A few years later, you guys refinance. You have, did you put your own money into renovations?
Yes. Yeah. But
okay,
honestly, David, we have our own team, right? So it's not like it still costs quite a bit. Not quite a bit. Sorry. Let's say the unit was flipped plus the fire retrofit. Let's say all that was done with $30,000, give or take.
Great. So here you are, buying a property for $575, selling it for $840 with only $30,000 of your own money into the project.
Yeah. And the way I see it too is we've had it for 3 years already. and it cash flows, I think it's $1,700 a month, let's say, ish. And you're making me check my memory here, but
no, you're good.
I'm trying to think of my spreadsheet. So the way I look at it is, I don't know what the math is on that, times 12 times 3 years or so, but
that's a significant return.
It's a no-brainer, right?
Yeah.
I love it.
Well, that's great. Well, thank you for walking us through that. That's a great example of what you guys do and how powerful seller financing can be. I do want to touch, before we move into our final segment, asking our final 3 questions. I'm interested in, so here's the challenge that goes through a lot of people's minds is with seller financing, 100% financing, creative financing deals, you're often leveraged. And now we're in a market that is very unknown moving forward. How do you guys feel about the deals that you currently have as we move into a market that's, we really don't know what this thing's going to look like?
Yeah. And I mean, I think for us, a big piece of it is that we ensure to buy the right properties, right? We always have these things in the back of my mind. What happens if the, market changes or there's vacancy? So, I think it's important to make sure that you're buying the right types of properties, not just underperforming. Of course, that's a huge part of it. But the ones where you can really know that you can pay them back. And in our case right now, we're sitting obviously comfortably. All our the second mortgages have all been paid back. We're not stopping. We're taking this situation, and we're actually being the SOS for people who want out, right? So some people are tired. This was enough for them. They want to exit. They don't want to deal with tenants, maybe they missed some rents or whatever is happening. So they were able to, so we're certainly reaching out to people. We're continuing. And like Dave said earlier, we now have 3 deals under contract. So, it's.
Yeah. And David, the way we've been telling our mentees is make sure you're buying buildings where, you're putting this in the forecast. So let's take that sixplex, for example. When we had it, all 5 of the 6 rents up before refinancing, I think it made over $2,000 a month, right? Net cash flow. And then we refinanced for higher amounts. Our debt went up. So I think now we're down, like I said, 15, 16, 17, wherever that is, 15, let's say, to be safe. Well, the $1,500 building, let's say tenants are having hardship and rents and all that. Let's say my rents are going to go lower, which they seem to go higher sometimes with that. But let's say my rents go lower. I'm $1,500 up right now. So if I shave off a couple $100 off every rent,
you have some room.
Exactly. And have some room as well. Like think about interest rates. So if you're buying a property right now and the interest rate is amazing, yay, fantastic, good for you. However, is it sustainable for you in 4 or 5 years from now, right? So plug in your numbers, adjust accordingly, make sure that it's still going to make sense.
Give it a stress test. Put 5% on your first mortgage. See, give it a higher rate to see what happens. Because who knows, right? It might happen. So again, it's your exit has to be first. You have to exit before you enter any deal.
Yeah. Well, great. Well, let's dive into our final 3 questions for you. You guys ready?
Yes.
Okay. What's the biggest challenge that you faced on your apartment investing journey that we could all learn from?
Biggest challenge.
My biggest challenge was probably getting started and just being so scared and not taking that first leap. If I hadn't met Mel, again, it was in the back of my head from high school, but I was so in my own head and just so scared that was my biggest mistake. So let's say, I wouldn't have met Mel that day. Who knows if I would have ever done real estate. So I think my biggest thing is just get over and everyone always says this, but it's true. Just get out of your own head. You can find a solution to anything. Real estate investing is not earth shattering. You're just basically next problem, fix it. Next problem, fix it. Just jump in. You're going to figure it out. It's all going to work out if you're doing the right things. But that was my biggest mistake, was being scared, and thank God Mel helped me out.
And my biggest challenge was, I think, getting past the fact that to feel comfortable using other people's money, because I was literally petrified of using other people's money. I didn't want to use it and not be able to pay it back. And it did keep me kind of frozen for a while. And funny enough, Dave was able to, he was more like, no, as long as we have our exit strategy and whatnot. And then once I finally came to terms with that, then we were able to kind of proceed and grow and go for it.
That's great. What's the biggest win you guys have experienced on your apartment investing journey so far?
You know what I've liked? Because some people didn't believe in the philosophy, and what was I going to say? Oh,
our little guy.
That's great. Hey, we're all
all the kids are home. This is reality.
Quarantined.
Yeah, I just think the coolest thing was we did it on a 17-unit building. So because some people think, yeah, well, that's okay on smaller deals. Well, the philosophy works, right? So we bought a 17 unit building. I think it was 1.4, 1.5, whatever it was. And now it just got evaluated again or refinanced, and it's 2 million. So that's what I like, is that and now we're going for buildings in the 30s units. So it works on every type of building. It's just the same philosophy with bigger numbers. So for me, I like doing it because it showed people, hey, you can do it on big buildings too. So they're bigger buildings.
And for me, my biggest win was probably more on overall. I had a huge goal. I wanted to buy, when I met Dave, I told him I want to buy 10 properties by the time I'm 40. And I was 30 something back then. And everybody told me, that's crazy. You won't be able to do that. And by 39, I had 24 buildings. I had quit my full-time job. And I had way surpassed that goal. So I think for me it was, realizing that, wait a second, I was actually underestimating what I'm actually capable of doing, right?
That's great. Good for you. Last question for you. What's the best advice you have for someone who's just starting their apartment investing journey?
Good. If you're going to be doing it, like anything else, don't try to do it on your own. Find somebody in the specific field that you want to expand in and, invest in it, right? So if you're looking to be a flipper, find somebody who specializes in buy and sell, flip and sell. If you're looking to buy multifamily using other people's money, find a mentor. We happen to be some who does that. But seriously, it's like trying to, and we have this conversation all the time, right? It's like, I couldn't try to operate on somebody because I don't know what I don't know, and I'm not sure what to look for, and I just would not succeed. And you're dealing with thousands of dollars. You can try to do it by yourself. Yes. Are you going to be able to buy properties? Yes. Are you going to make way more costly mistakes? And is it going to take you 10 times longer? Absolutely. And I always refer back to, Tony Robbins, one of the most successful people in the world, of course, and he got mentored, right? So anybody who's highly successful, we've been mentored as well. We've spent almost $100,000 in our own growth. And that's certainly part of our journey as well, was
paid off,
investing in ourselves, but the return on investment is endless.
That's great.
Mine would kind of touch on Mel's is, I would determine upfront what you're thinking. And this is a good time. Like we're in not a good time, but like in a crisis right now. So I would determine what type of real estate you want to be in, your niche going to be, and I'm not bashing anything, but like, do you want to be an Airbnb person? Now, are you worried about Airbnb? Like they're shut down, for the time being. So I would say, look at what you want to invest in and see if it's sustainable in times like this. So I would really niche into something as to try to do everything. And that's why we love multifamily, because the rents are still coming in, and it's not recession proof, but you're layered up there where you've got some layers.
That's great. That's great. Well, Mel and Dave, thank you so much for taking some time, sharing your journey with us. You guys have a really great story. And I think a theme here is the fact that you both have supported each other, and especially in areas where one might be weak and the other one might be strong. And that's great to see. And I think that goes to show the importance of partnerships, in this case, marriages and so forth. But you guys have an incredible story. Thanks for sharing that with us. Again, for all of our listeners, go out and check out investormelandave.com and investormeldave.com. So investormeldave.com and www.12in12months.com if you want to check out their mentorship program. So again, guys, thank you so much for coming on. I appreciate your time, and hope to connect with you again soon.
Thank you so much. Thanks for letting us be your first couple that you've had.
That's awesome.
It's been fantastic.
It's great. I love it. Have a great day.
You as well. Thank you, David.
Bye-bye.
Bye.
Bye.